I'm the only Bitcoiner who would say this, but if you are holding what feels like a lot of money to you, I think it's okay to take a little off the table. There was a time when I had no money and $30,000 was a lot to me. And I think it's okay to take $30,000 and put it into, other things and say that was a lot of money to me. And then it's probably going to underperform Bitcoin, but there's a little behavioral change that I see in people when they set themselves up. Even if Bitcoin remained flat, I think that like MSTR would be fine. Everyone else came late to the party though. What's interesting is the goal of these treasury companies is that their entire business is in trying to increase the Bitcoin per share. So I think the strategy is not being honest when they say that they're trying to acquire more Bitcoin per share, because when they drop below mNAV, they should very quickly bring that right back. There should be no reason that they don't sell Bitcoin in order to increase Bitcoins per share. Same with Naka, same with all these others.
Hey, everybody. Today on Treasury Orange, I'm talking with Junseth. If you've been around Bitcoin for a while, it's impossible not to know this OG. Never one to toe the Bitcoin party line, Junseth was an early podcaster and never shies away from a provocative opinion. Junseth, welcome to the show.
Hello. Is that never shies away from a provocative? That's true, I guess. I think it just means that my opinions are provocative. I've learned.
I love it, man. You've been in Bitcoin, since the early days. When you first got involved, what did you think Bitcoin would become versus, what it's actually become today?
Well, when I got here, I was an anarchist. I would have called myself an anarchist. And I've changed a lot over the years since then. But I really thought that Bitcoin was sort of our way to take down the government. I think that was the thing that was most provocative to me about Bitcoin. And I guess Bitcoin still could do something like that, but my opinion on whether government is necessary and such has changed quite a lot. So, but I do think that Bitcoin remained interesting to me because I learned deeply what it is and how it works, and it's the fact that it is a commodity that comes out of your computer. It really is the first ever digital commodity that's ever been created. I think that's a really interesting piece of what we're looking at. We're in this world right now where we've essentially discovered oil. We don't know exactly what it's for, but at some point we're going to find Bitcoin's kerosene lamp. And a lot of people think that as Bitcoin as money is what its kerosene lamp is. And, so others think other things, but I think that Bitcoin is a new commodity and it's the first ever digital commodity. And I think that in itself is worthy of a second look.
What do you think's been like the biggest surprise about how Bitcoin has been adopted?
Well, when I got here, I feel like there were like 2,000 of us in a forum. There might have been more. I don't know how many people were actually here, but I really felt like I'd missed out on all of the good parts. Like I was late. The same feeling that everyone has when they get here now is exactly how I felt. I felt like I was really late, and all of the good stuff had happened. All the interesting things had already happened, and I think what has surprised me about adoption is that it has continued. It's grown. I mean, I think it's always surprising when you're really early to something and then other people pick it up and find it to be interesting as well, especially when it's something like Bitcoin. It's super esoteric and sort of doesn't really seem like it has a puzzle piece in society. It's almost like if you were, I don't know, looking at goats and you thought, boy, I'd really like to start buying goats. And then all of society, like 10 years later was like the most important thing in the world is goats. And you're like, wow, I really front run that, and it's just it's very weird to watch. I think a lot of people expected that adoption would occur. early on, but those were libertarians who thought the same thing about every one of their dumb ideas. So to see this actually get uptake is, it's humbling to have been very early, but it's also really interesting to watch it continually find sort of niches and uses.
Yeah. I want to get into maybe your take on libertarians in a little bit, but um, it is kind of weird, as someone who kind of identifies as a libertarian myself, to see
Sorry.
that to see Bitcoin as something, that is where small government-minded people are kind of making inroads and seeing success in the broader market. Do you agree with that?
No, I think that Bitcoin really is not just, I mean, I think libertarians were a little late. Like there were a few libertarians here early, but if, when I was debating early on, even with libertarians, I would go to like libertarian meetups, and there was a lot of resistance to Bitcoin because libertarians at the time were obsessed in particular with gold specie and silver specie. And they really rejected the premise of Bitcoin because it wasn't, quote, backed by anything. And I don't, I understood intrinsically that that wasn't necessary. It's kind of dumb. Like, what is gold backed by was my question. And everyone would kind of sit there like, what do you mean? Like, nothing. Ultimately, there is like, there's a sort of I guess you might call it like a premissory commodity, and like we have these representative commodities, sort of like the dollars when they were backed by gold, they represented gold, right? And and then you have the things themselves. And I think that's actually Bitcoin Tina who really gave me the language to use there. But you have the thing itself. Gold is the thing itself. When the dollar is backed by gold, the dollar is backed by the thing itself. And, Nike makes shoes. The shoes are the things themselves. And Nike stock is stock in the company that makes the thing itself, right? So Bitcoin is the thing itself. It doesn't need backing because it is itself the thing. So this idea that you would need backing, I think it was interesting how I was able to arrive there intrinsically. It was very obvious that you didn't need something backing it, that it's a commodity. So the question is a ridiculous question. But libertarians are so stupid that it took them like 10 years to figure that out. And they had to be told by somebody else that that was the case. And so I mean, I find that to be like the libertarian sort of entrance into Bitcoin, I think, was a little bit later. Freedom loving people, I think the idea, I think Bitcoin has really sort of entered that fray because Bitcoin really is, it gives you the ability to transport your wealth with very little effort in an anonymous way. But I think the true freedom lovers, the interesting people in that realm aren't the people who are ideologically aligned with freedom, but more the people who find it necessary. I always find people that have the necessity of things to be much more interesting. So someone like fleeing an autocratic or dictatorial nation like Venezuela or China, what do they use? That's like a much more interesting question to me. And the fact that many of those people have begun using crypto generally to get out of these places is very interesting, particularly given my belief that Bitcoin is the only crypto that matters. But a lot of them have used other cryptos to start leaving autocratic and dictatorial regimes. And I find that really interesting that Bitcoin does serve that function, because if it didn't serve that function, it wouldn't work. Right. So, yeah, that I find to be really interesting. And I just don't, I think most of the people that are freedom lovers in the ideological sense tend to be LARPing. Like they're not really, what are they going to go do? Like find an island and declare themselves the kings of it? It's very stupid. So most of those people are LARPing. They're Americans who just want to like tell you that they believe in the most freedom more than you, and they got Bitcoin. So that's how you can know they're the most freedom loving people. But the reality is that the people that really need freedom, that don't have it, those are the people for whom Bitcoin actually really is a commodity that works. And it's an amazing fact that many of them do use it. I mean, they use other things too, but Bitcoin is one of the many things that they use.
Yeah, I think maybe Peter Schiff's to blame for a lot of the a lot of the libertarians coming late to Bitcoin, maybe. I
Yeah,
think there's still a
maybe.
lot, still a lot of work there. But yeah, really interesting point about, if you're in a really autocratic regime, you're not in the freest country in the world like the United States. Bitcoin is so much more meaningful, right? Because the ceiling is so much higher. Um, so I I guess in this cycle we're in, Junseth, you've been through a lot of cycles, and kind of a popular question that's circling around is, how is this cycle different? Is it going to look similar to previous cycles, or is it going to be more of the same until proven otherwise?
I don't believe in cycles. I think that every time the cycle comes, it's ready for a breakout of what we expect. And I think that happens every quote cycle. You end up with something very unexpected. Like the last cycle, we went below the previous all-time high. And, who knows, at some point, the quote cycle is going to break altogether. And I think we enter what I call the ever pump, which is just that Bitcoin just keeps going up. It might not go up at 500% every 3 months, but it might go up like, 9%, 10%, 20% per year, right? Which would still be a phenomenal return on any asset. But I think that there's a point where Bitcoin kind of just becomes important, and people are using it, trading it, buying it enough that it just doesn't really it doesn't really abate. It just kind of continues on a upward trajectory, upward to the right, slow, some down, some up, sort of like the stock market does with, these sort of random walks, going up and down, and slowly proceeding up 9% per year, or 10%, or whatever the number is. So, I think Bitcoin has that in its future. I think in the even more extended future, I think it's important to note that if Bitcoin is money, it's supposed to be a low risk asset. So it should return eventually the smallest amount of everything in your portfolio, in the way that if you hold cash would not outperform any at-risk investment over the long term. So I think that's like the way in the future Bitcoin. But in at some point, this, what we call a cycle, I think it'll break. I don't know what causes these ups, these sort of like bubble like ups, and I don't really understand why Bitcoin continues to behave this way. And I I wish I had an answer to that. I feel like three guys in a room know the answer. They're like, okay, guys, let's start the cycle, and they like they start.
It's self-reinforcing, isn't it, Junseth?
In some ways, but it's just really interesting because everyone expects Bitcoin to go up at this like specific time, and then it does, and that's really not supposed to be how things work. And I tend to believe that there's explanations for these types of things, like that there is a rational reason why it's doing that. And I don't know what that reason is. And that's always what weirds me out about the cycles in Bitcoin, is that I don't know if it literally is three guys in a room, or if there's some other, like, is it that every 4 years in November, there's some weird use case for it, like in China, maybe they're putting it in necklaces or something. I don't know. Like in the way that India uses gold, and there's like a gold season. Like, is there some reason that Bitcoin does that? Because what you'd expect from the market is to anticipate that move, right? And to sort of value, like in the way that, like, efficient market hypothesis would say that stocks are valued at the net present value of future cash flows, right? And with a commodity where you understand the uses and the demand for it, you'd have some sort of approximation, not of the cash flows, because commodities don't cash flow, but you would have some sort of approximation of the future value that you'd be able to infer from the idea that there are cycles, and how these cycles react, and what the graph looks like and whatnot. So you would expect the market to sort of soften these cycles, not in the way that like we get a lower and lower cycle, but maybe more of a, like, in the preceding 4 years, to edge up to that number that maybe would have otherwise been what we call a cycle. But it doesn't do that, and that really weirds me out, and I don't understand why. And I
Yeah.
don't know that we'll ever get a good explanation.
Yeah, I think, markets are, or value is so subjective. Um, that I think sometimes it's really hard to pin down, and markets can stay really irrational for um, a long time. And I think Bitcoin is kind of the extreme case of that, right? Potentially, I don't know if irrational is the right word,
Yeah,
but
but it's getting deep. The market's getting so deep now in Bitcoin. Like it's trading in, billions and billions of dollars at this point. So like I don't know how long this lasts where the market behaves in the way that the market has been behaving, and I don't know how long it goes into the future where we get these astounding returns. And someone like Michael Saylor seems to think that this is going to last for 10, 20 years. Maybe he's right, maybe he's wrong. Ultimately, it doesn't really matter whether he's right or wrong, because he's got so much Bitcoin at this point. Let's say Bitcoin goes to $1 million a coin, and then it just sits there. And let's say it does that next year. It doesn't really matter what your quote CAGR is for the next 10 years at that point, right? So who knows where it's going to go? Some people have different ideas about how to measure that and determine what's going to happen. But this cycle is an interesting cycle in that we really do have a lot of global liquidity coming in, and Wall Street for the first time has entered the fray. So I don't know what that means for the long term, but there's only so many sources of really big money that can come in here. And the next one might be central banks or countries. Those are also really big money. But once you have the companies on board, we're not fully, the whole stock market is not filled with Bitcoin. So we haven't seen the extent to which like the entirety of the market has, every company stores 5% of their treasury in Bitcoin or something. Like we haven't experienced that. But if that came, then there isn't that many more sources of huge liquidity to come. And I continually wonder what happens once you've kind of like tapped out on your sources of giant liquidity. And I think that's really interesting, especially as, we have these metals like gold and silver, which, I mean, I like gold. I like silver. They're gold and silver are really pretty. But I do think that there's a lot of reasons that over I would say 100 years, they're going to demonetize. And it could be as simple as, we're able to, we discover how to do fusion and are able to actually create these metals at a very cheap price. Who knows? And before you call me, you say that's ridiculous. That's what happened with aluminum. Aluminum was one of the rarest metals on Earth, and we needed electricity in order to make it. So once we discovered how to harness electricity, we now have so much aluminum, we use it to cover our food in the fridge, right? And it used to be that they even made coins in aluminum. We wrap these giant tubes that we fly through the sky in aluminum. I mean, it is a cheap ass metal, and it used to be the most expensive metal on Earth. We covered the Washington Monument's top with aluminum at one point. It was as a display of how wealthy we were as a nation. So can you imagine now covering the Washington Monument with aluminum in order to display our wealth? I mean, that's hilarious. So,
it is hilarious. I don't think that's too crazy.
We got to go to Costco, get some foil.
So a big component of money, Junseth, is the store of value piece. And that's, like it or not, other than, maybe Silk Road, the big focus on Bitcoin as an asset has been on its store of value for a lot of people. So and you talked about on a Twitter space we were on the other day about gold had kind of become a poorer store of value than it had been. Can you walk me through how that happened and why equities kind of ate gold's lunch?
Well, I don't know why equities ate gold's lunch, but I think that there's in some sense the idea of money is purely theoretical, right? We've got this idea that there is this thing that is clearly desirable, which is that we want some sort of decentralized ledger where you can hold a number and then Dave can hold a number, and then you could take a look at your two numbers and you can know which of you has more of like more social value in a sense, which of you has acquired more things as a result of your contributions to humanity, right? And what's really interesting about something like capitalism is that you have this world in which you may have done something that, like, maybe you invented a heart valve that saved lives, and you made $10 million because you've got this invention, and every day it's used and you get $1 per item. You've negotiated this and whatever. And Dave created a material that is really, really soft and people love to hold in their hands. And so he made a bunch of really soft, tiny little stuffed animals, and he's worth, $537 billion, like Ty Warner, right? So, you look at, if you were to ask somebody who's contributed more to the world, the guy who invented a heart valve, or like Ty Warner who made Beanie Babies, I think a majority of people would say you. But in a capitalist structure, we have this like other way of doing it where you basically, like, how many people are buying your thing, how much, in a sense, how much fun have you contributed to everyone's life. So maybe he's contributed 37 seconds of fun to everybody, and that's worth way more than your dumb heart valve invention, right? And but regardless, we want this way of measuring that. And we want a ledger, and the dollars have been the best way that we've had that ledger for a very long time. Gold was pretty good because it's really hard to extract from the ground. It's pretty rare. You don't want something that's easy to extract. And then paper money is even better because when you take the backing of the thing from the dollar, what you end up with is like basically this perfect ability to measure everybody's net worth to society, right? The problem is that every single government so far who has the printer has gotten a little bit greedy and begun committing a little malfeasance. And the way they do this is they just, at first they sort of deflate the value of your currency a little bit by printing a little bit more, and that's really not a big deal, but over time they're like, hey, we could print a lot more, and then they do that, and then the country collapses. So that's the problem with dollars in that sort of way. But the reason the dollar is so effective is because there's no alternative use for it other than like maybe burning in a fire, right? So its next best use is fire fodder, whereas Bitcoin's kind of similar. And I actually say that Bitcoin couldn't exist without the dollar, because the dollar proved that all you need is a ledger for value. That's what the value is of the dollar, is that it is an effective ledger. So if you can construct something that has no second best use, and can't be screwed with by governments, then you have the possibility of removing the ability to print money from the government, and you have the ability to basically have this thing that is pure value and pure ledger. And that's really important. It's the same way as like mining. Mining has no alternative use. It can only really be used as a number equation for creating more Bitcoin. If it had a secondary use, it wouldn't be that useful as a means for creating Bitcoin, right?
Yeah.
So, as far as like gold, why did gold fall off? I think gold was just it is not as good of a ledger, decentralized ledger, as the dollar. It has other better uses. Jewelry is a perfectly legitimate use of gold. And there's also lots of other uses for gold when gold is $1 an ounce, right? It's just that when gold is, $4,000 an ounce, there aren't a lot of great uses for it. So gold is this very useful metal that we actually can't use for its utility because of its price. And Bitcoin really has no other use, and the dollar has no other use than as a ledger. And that's why gold is displaced.
Yeah. And we've really seen people adopt equities kind of as a substitute for money, I think, especially over the last 50 years, where it's like,
Well, it's a substitute for value, right? Like gold, like I was saying, is theoretically, like when you're investing, the thing that should be the least risky is the thing that your money is your money, that your denomination is in, right? So you shouldn't expect a high return from any of those things. Gold being a good example. The libertarian thing is, they say gold was one nice suit in the time of the Greeks, and it's one nice suit today. And I coined this term suitortunity cost, which is how many suits have you missed out on by investing in gold when you could have invested in equities or anything else, right? So suitortunity cost, gold is always is a suit of like 1 ounce of gold is one suit. And if you had taken that 1 ounce worth of gold and put it into equities, you would now be able, or a 50-year time span, you'd be able to buy 100 suits, right? So gold is not it'll hold your value, but your money's not at risk. You're just kind of preserving value. Whereas like in other places, you're both doing a decent job of preserving, because particularly with the invention of the ETF, you have a decent low risk asset that actually also puts your money at risk. So you're able to get returns on your money in addition to holding its value. It does go down, but for the most part, it kind of goes up.
Yeah. So in a world, where we're more Bitcoinized, Junseth, it's hard to know what that exactly looks like. Hyper Bitcoinization is this kind of pie in the sky view that a lot of Bitcoiners, might hold. That's possibly unrealistic, at least in the near term. But what do you think? When Bitcoin's a dominant store of value, what do you think investment even means? I was talking with Jimmy Song a couple of weeks ago on the podcast, and he thought that investment would look a lot different because people would hold the bearer asset. It sounds like you might have a little bit different opinion in that people might still be chasing equities, or will it rein in bad behavior?
Well, I think when you have, it's a hard question. I debate this with Bitcoiners all the time, because I think bad behavior is the result of bad thinking, and I don't think you can rein in bad thinking. I think that uh, people do and have bad thinking all the time, and unless you can do away with it, I think the theory of a lot of Bitcoiners would be that those who do bad thinking are not going to be able to acquire as much in a Bitcoin economy. And maybe that's true, but I don't necessarily think that is necessarily true. I do think, I mean, look at the democratization of equities, right? With Robinhood. When you democratize this and make it very simple for retail to get into equities, you end up with meme stocks, right? And that's not more intelligent. It's a stupid investment for the most part. But like in the short term, a bunch of people get, make a lot of money. Most people either end up where they were before the meme stock, or poor, worse off. But it's a meme stock, right? You end up, you put retail in there. So like Bitcoin is a democratizing asset protector in a sense, because idiots can also not share their private key with you. So idiots can preserve wealth, but so can smart people, which tells me that like you're still going to have idiots that get rich, and they're going to still malinvest. And I don't really know what investment looks like in the future for that, for anybody. But if Bitcoin is returning 3, 4, 5, maybe 9%, it does mean that equities have a different hurdle rate in terms of investing in them, right? So right now, equities are returning 9% on average every year. It's going to be hard to get investment if you're not going to be able to return more of that. And I guess in that sense, the bigger a company gets, the closer it gets to the average. And in a world where the average is not any higher than Bitcoin's return, it might be hard to get those types of returns, which maybe you end up returning to like ma and pa stores. I don't know. But you certainly are going to have, there will be differences. I just don't really have an idea of what they will be. It might be that there's more lending. Lending was, I mean, it's interesting in the early American history. It's talked about by Gordon Wood in a couple of his historical books on early America. I think he mentions it in his biography of Benjamin Franklin, that the early American gentleman, the idea of a gentleman is someone who really doesn't like appear to work. But in those days, the early American politicians and that political class, most of their investment was actually in lending to neighbors. And I thought that was interesting because they were on a gold standard, right? They were on sort of a hard money standard. And if that's the case, I actually wouldn't be surprised if you end up with a sort of similar economy where what you're doing is more local, more investment in your community. I mean, the investment landscape right now is absolutely different than it was in the 90s, even in the 90s, right? The internet has changed a lot, but so has sort of the function of bank consolidation in terms of what is available out there for lending. Like if you try to buy a business, it's actually like I've just gone through this process. It's very difficult because you have to have the business. They will not give you personally a loan for the business that you want to buy, and unless you're going to like become an owner operator and actually manage like the till, right? You can't go to a bank or a credit union and say, hey, I'd like to buy John's business. John has 10 years of books. Can we look at them? And here's what he says it's worth. Here's what I'd like to pay him. I need a loan for 600K. And, in the 90s, I feel like you could have done that. And today it's kind of like they look at it. They're like, no, we don't do that. That's not the type of loan we do. And I think that's malinvestment. I think that's the kind of thing that probably would change on a Bitcoin standard. You might be able to there might be more people that are willing to like put their money at risk in that way. For smaller businesses, it might be that conglomerates and large businesses really don't work mathematically, that the returns are just too low once a business gets too big, and that it's just better to put your money into small local things that you understand. I don't know how it changes, but I do think things do change.
I hope you're right, Junseth. I got my career start in banking. I was a mortgage lender and then a business lender. And you're right, like it was so hard to make loans for people, for entrepreneurs or people starting a small business. And a lot of the graybeards around, that worked with me were saying, yeah, back in the 80s, it was like a handshake deal. People lent money based on reputation.
Well, you go to
And
your
yeah,
bank and sit down, and they'd be like, look, you don't have great credit, but we know you. You've got 3 other businesses in the community that are doing very well, or something like that. And they would write you a loan. They would take the risk. And they would look at your finances and go like, you can underwrite this loan yourself if you wanted to. They won't do that anymore. Even
okay.
if you were to say like, I'll escrow the entire value of the loan, and if I don't pay it back, you can take my escrow. They still won't do it. Like it is a different world where we have removed the community aspect. I do think like it's interesting when you start a business and you start doing the returns. You're like, I put $10,000 into this business, right? And now the business is making 200,000. So you put 10,000 in, it's making 200,000 a year. That's a phenomenal return, right? But then over time, what happens is, when you've maxed the business out, let's say in the local community, now you're making 400,000 a year. It's not going to get bigger. It might get to 450, right? So those are phenomenal returns for the initial investment, but going like ongoing, it's not like you can go back and, return to get like more investment. The only way that you get phenomenal returns would be to then take that business and just scale it up. So what you end up with is this sort of like conglomerate type experience where, a business that makes $300,000 or $400,000, what they do to grow, instead of growing, is they just buy a bunch of other businesses that make $400,000, and they're like, look, all of these businesses have maxed out. So now we're just going to buy them all, consolidate them. And now look, our company makes $4 million, but all you've done is wrapped these businesses in, kind of stolen a little equity so that you have a little on the side to like go public with or whatever you're doing. And you've made the company big enough to be interesting to like, the market as a whole, but you haven't benefited anybody by doing that. In fact, you've probably sort of centralized the control. And now the company forgets that there's different needs in Florida than there are in, California. And you have a very heartless company as a result that just kind of it standardizes all the protocols and doesn't really work. And my hope would be that Bitcoin kind of changes that and brings back sort of the local investment. I don't know I don't know any function of Bitcoin that would cause that, apart from maybe that is what happens on a hard money standard. And my only hope is, what I've read of history, that is how the economy worked. But then I don't know how the internet changes that. Is this the cause of the internet, or is this the cause of being on fiat? I don't really know.
Hmm. Good point to ponder. Speaking of companies gobbling up smaller companies, Bitcoin treasury companies. We've seen well, we've seen some consolidation there. First, I guess first of all, let's zoom out. What do you think about the Bitcoin treasury phenomenon generally?
It's interesting. It's I So the thing with the Bitcoin treasury company is, I was talking earlier about like second best thing to do with your money. And that's kind of always a really important question in business, right? Like if you're trying to bring people into a company, you're going to spend your money first on the place that, is cheapest and brings the most people in. And then the second best thing is the second cheapest to bring the second most people in, right? And that's kind of how all business expenditure works. So the question of like the treasury companies is what is the most profitable way to manage your treasury? And Bitcoin for MSTR has been phenomenally profitable. The idea that there are companies that pop up whose entire business is managing a treasury, to me, is anathema. I don't really understand how that could be a business. I think that treasuries generally are regarded as one-to-one. If you have $100,000 and you don't have an underlying business, then your company is worth $100,000, or if you have $100,000, and that maybe you might get a little kicker because like, Steve Jobs is on your board. So you presume that maybe he'll be able to do something with that 100K. So maybe get 120K of value. But the idea that your treasury would be valued at a substantial price more than the actual treasury holds within it, that seems crazy to me. And the idea that the entire company would be nothing but treasury, that seems crazy to me. If someone said to me that they were going to start a company that is like a trade desk, a trade desk company, that's a business I understand. And I don't understand how that's substantially different from a treasury company, apart from the fact that they will actually be earning Bitcoin. Like if I were MSTR right now, he's got his underlying business with his entire portfolio, with his entire monies. I think that I would probably tack on a secondary business and just start doing OTC and just become the biggest OTC provider. Because with OTC, when you sell, you're hedging, when you buy, you're hedging. So you're never losing Bitcoin. You're just gaining more Bitcoin. And with that much Bitcoin, you could literally just be the biggest OTC desk in the world. And you would be literally doing the thing that he's saying, which is acquiring more Bitcoin per share. And the fact that none of them are just giant trading desks blows my mind. That to me is the obvious first move.
Yeah, I think you're right. We've talked about that on our show, and it seems inevitable. I'm curious as to why. Maybe it's just investor trust that they're worried about. Maybe or that nobody's done it. Somebody's got to be the first mover, to kind of do that OTC trade
In an
and
OTC desk,
strategies.
you're not losing money. You're not selling your Bitcoin, right? You're selling premiums. So people buy Bitcoin from you, but you're buying it back immediately because you have a source to get it cheaper. That's kind of the idea. So you're just selling premiums. Like if someone buys it at 2%, then now you get 2% more Bitcoin for that sale. So I'm always baffled by it. I'm really confused as to what these companies are doing ultimately. I wonder if they can survive without an underlying business, or if they will just all end up kind of selling Bitcoin. And I do think it's interesting, given that if you're convicted that Bitcoin's going to have a high CAGR going forward, like 12% or 15% or 20%, it is a rational move to borrow a number that is lower than that and then take the entire stack and put it in. So that's a rational move. People do it all the time with like houses, right? Stuff like that, where if you have $1 billion and you're buying a $16 million, $20 million house, you're still going to get a mortgage on it, right? Because like you're going to make more. Let's say you make, like I said, like 10% in the market and your mortgage is 4% or 5%. You make a 5% spread on that money every year that they let you keep it. And then your home is leveraged. So you get leverage on the returns of the home. So it's just kind of, it's interesting to me as a thesis, because I find the thesis to be compelling and fundamentally mathematically sound, presuming that you are correct about the ongoing CAGR, which is a bet.
Yeah, I think possibly these companies have tried to spin up how many Bitcoin they're holding, maybe too quickly, and that may be part of the issue. How do you feel about like the perpetual preferred equity products? Is there room for more than just Michael Saylor's company issuing those? Because we saw a Strive talk about that they're going to be offering perpetual preferreds by the end of the year. That's the plan. And their CEO, Matt Cole, has, some connections in the pension space. So he's at least tapped into some people who are looking for yield on fixed income. So do you think Bitcoin does kind of solve that for people who are yield starved?
All of this is a bet on CAGR, every inch. Bitcoin solves it if its CAGR continues the way it is, right? But I mean, the answer is if the perpetual, that's heavily caveated. If the perpetual preferred products are successful, in the sense that if the company can afford to pay the perpetual dividends, then you absolutely need more of them in the market because you need to de-risk yourself from the possibility that any one of these companies goes belly up or stops paying on the perpetual preferreds. So in order to hedge your risk, you have to have a basket, and there's no basket available right now. It's merely MSTR, Stride, Strife, Strike, and STRC or whatever. Stretch.
Yep. Yeah. So you mentioned that some of these companies might have to sell Bitcoin. Do you think premiums are sustainable? Is it because Bitcoin's price or sentiment's been kind of down on choppy Bitcoin price that's causing the gap in the mNAV, or what do you think? What do you think is the real underlying issue? We've seen Nakamoto and Strive really get hammered, and obviously the one I think those are at least serious companies, who are taking this seriously. I think there's a lot of treasury companies who are in it for the trade or the popularity, just trying to save, a real sinking ship, not like a melting ice cube like Sailor called strategy. But yeah, what do you think? Do you think that all these spin ups are kind of doomed if Bitcoin's CAGR isn't there in the near term?
No. MSTR seems pretty safe given how much Bitcoin has risen. As long as Bitcoin, even if Bitcoin remained flat, I think that like MSTR would be fine. Everyone else came late to the party though. So maybe Metaplanet's in a pretty good position. I don't know. I don't know what the prices that everyone's gotten these at. So, no one take this as financial advice. I'm just saying like it does matter. What's interesting is the goal of these treasury companies is that their entire business is in trying to increase the Bitcoin per share. And it seems like if that is your goal, what you are describing is literally, like I said, a OTC desk. If that is your business. So it blows my mind that, someone like Sailor or these others are going to do it to the upside where they will issue shares to buy Bitcoin, but on the downside, they won't buy shares or they won't sell Bitcoin and buy shares back with that money because it would accomplish the same thing if their shares are selling at a discount. You would end up with more Bitcoin per share. So I think that strategy is not being honest when they say that they're trying to acquire more Bitcoin per share, because when they drop below mNAV, they should very quickly bring that right back to mNAV and basically act like an ETF in that sense to the downside, because there should be no reason that they don't sell Bitcoin in order to increase Bitcoins per share when their share price is below mNAV. Same with Naka, same with all of these others. There's no reason, if the entire purpose is actually but then I get the sense that like actually calculating mNAV for a lot of these guys because of their leverage is a little harder than they like to admit. So that might be the case. But yeah, I think it is really really interesting that the entire business of these companies is to try to increase the Bitcoin per share, and that they aren't taking all opportunities to do that.
Yeah, I don't think we can take that claim literally, Junseth, because I don't think investors are aligned, right? Because if I think a lot of investors in these Bitcoin treasury companies, if they saw a company sell some of their Bitcoin stack, sentiment would just go in the toilet. I could be wrong because I think
Why? You get more, like if you get more Bitcoin per share, the number of Bitcoin that you personally have is more.
Yeah, no, I agree with you. I think sailors just kind of set the standard of saying, whoever has the most Bitcoin wins. Like, I think everyone's taken that seriously,
It's a really
right?
stupid standard because it's a really stupid standard.
Yeah,
Because like ultimately, like, I mean, maybe as far as like the company goes, it's a really good standard. But like going into the future, what's the goal of these companies going to be? Is it going to be to just hold the most Bitcoin and then to spend it? I think that's fine. If that's the case, then this proposed Bitcoins per share thing that Saylor keeps talking about is a really bad metric. You're back to like, earnings multiples and such like that. But you know, if the actual goal is to increase Bitcoins per share, then you should take every opportunity to do that. I don't know that um I don't know that the corporation itself having the most Bitcoins in the world is is the best idea or not. I don't know what their plans are to do with this stuff in the future. It seems like all of these treasury companies, their sort of stated goal is just to hold more Bitcoin than the other guys, forever and ever, perpetually, and to never like have an underlying business. And I think that is dangerous because I think what that would lead to is um, a likely consolidation and conglomerization of corporations who hold that much Bitcoin. I think what they would end up becoming is like Berkshire Hathaway, where they just buy up a bunch of companies at pennies and are operating very disparate sort of entities. And I think that's a really bad way to do business. I don't think that I want an economy where everything is a conglomerate. It's not, you can't take risk appropriately if you're conglomeratizing.
hmm, yeah, I've got to think about that a little bit.
Like,
That,
do you want a company that owns lots of laundromats and lots of banks? Or do you want a company
yeah,
that owns lots of laundromats and then
I
another
mean,
company that owns lots of banks? Like,
aren't you
to me, you want
investing in?
separation.
Yeah, aren't you investing in Warren Buffett in that case, though, in his ability to um, either monetize that company or turn it into a more of a profit making machine?
In some sense, you're identifying a person who is good at identifying managers. I think is probably his biggest asset. But your hope is that these companies individually are taking on the risk of their industry more than anything. So, like, conglomeratization isn't an efficient way to run an economy, and I would be afraid that what's going to happen in the Bitcoin space is that we end up with thousands and thousands of conglomerates rather than companies that are actually willing to take on a specific risk. And what you'll end up with is a really messy economy with a bunch of operators who don't know how to take risk in certain industries, but maybe do know how to pick managers, right? But you're going to have less efficient industries overall in that way. And, it gets really messy, conglomerates competing with conglomerates, rather than like if you had all of the companies that are investable laundromats competing with all of the other investable laundromats, you're going to have a very efficient sort of race to efficiency and price discovery and such in that industry itself, rather than a conglomerate approach, which it means that there's not a lot of synergies between the companies. That's the other thing is like, I think conglomerates are really bad at identifying synergistic purchases.
Yeah, I think one of the antidotes to that is something you touched on earlier. Certainly, is if we see Bitcoin kind of transform credit markets into something that we've seen before that is more sustainable, right, and more community based. So, just to switch gears real quickly, Junseth, I definitely owe you a beer or two because you really turned me on to the GBTC trade
Good.
back in 2023, and when I say turn me on to, I put my entire retirement into GBTC when it was trading at I think a 45 to 50% discount to its net asset value. I was looking at it and I was
Where
like,
did I turn you
this,
on to this?
what am I missing? Well, I was like, I was looking at it independently and I'm like, what am I missing here? I'm like, this seems, I remember in March, I think it was of 2023 when there was an opinion from one of the circuit courts and the judge was just like kind of indicating that, okay, we're probably going to give the green light on ETFs eventually because the SEC is kind of out of its mind. And then I saw you on What Bitcoin Did with Peter, and you were just like, this is the most obvious thing ever. And I'm like, enough said, let's go. And can you tell our audience about that, if maybe they weren't around then or don't know what GBTC was prior to it becoming an ETF?
So I've missed a lot of obvious trades in my life, a lot. Because I'm ignorant of markets in a deep way, right? Like there's just a lot of things in markets that exist that I don't understand. And one of them is like a trust formation, right? So early on in GBTC was trading for hundreds and hundreds of percent more than the par value of what was inside of it, right? And so the trade there that people were doing was to take Bitcoin, throw it into GBTC, and then they would get shares, and then they would have to hold them for 6 months. And then the shares would be the equivalent amount of Bitcoin. And then 6 months from then, you would sell it for 100 times what Bitcoin is worth, and then buy 100 times more Bitcoin than you put into it. So this is what people were doing. And very few people understood this because most of us are not sophisticated market participants. But GBTC was really the only way to access Bitcoin in the market. So it had this high premium, and the people that were making these trades were just doing very, very well again and again and again and again. Well, as time goes on, as people understand this trade, more and more people get into it. And what happens when you do that is as you sell, the price comes down, and it comes down, and comes down, and comes down, and comes down. And then I think during the last cycle, GBTC realized that it could eke out a large profit by getting rid of the premium entirely and sort of participated in the trade themselves. I think that's kind of what happened. My understanding. So don't sue me for defamation if I'm wrong, because I might be wrong, but that's kind of my understanding. And what happened is all of the people that were stuck in that trade, who had been doing that trade for years and were now in the trade, were stuck in that trade because the premium got sucked out. And not only did it get sucked out, it went negative. So now you were buying Bitcoin if you were buying GBTC, you would buy it with dollars, and you'd be buying Bitcoin that was priced at 90% of the value of Bitcoin, or 80%, or 70%, or 60%. Or if you waited long enough, like 48% of the price of Bitcoin. So I was on Twitter like every couple of days being like, I just bought Bitcoin at like, $9,847 or something like that. And people would, they were attacking me because it's paper Bitcoin in some sense, right? And people thought that that GBTC had lost all of the money, and there were lots of things going on but I fundamentally believe that I believe that GBTC did not lose its Bitcoin, that its Bitcoin was not obligated. These are things that I was pretty sure of, particularly because if they were, some of the more sophisticated operators in Bitcoin who do understand markets were going to go to prison for a very, very long time. So I was making my bet that those things were not true. And incidentally, they weren't true. And so when Bitcoin goes to 50% value on GBTC, when GBTC is trading at 50% below the value of Bitcoin, like basically what I realized is it doesn't really matter at that point how long it takes the SEC to allow ETFs. They're going to allow them at some point. But basically, in terms of returns, if I stick my money there, whenever it does happen, because I believe that markets are efficient, I believe that the value of the Bitcoin will eventually be zero. The premium will be 0%, which means 100% return on your money overnight. And I also firmly believe that it wasn't going to take 13 or 14 years for the SEC to approve an ETF. I thought it was coming much sooner. So I took a very large position in GBTC as well, as did apparently a lot of other people on my talking about this, which I'm very glad they did. And then sure enough, the SEC approved Bitcoin ETFs many, many, many years earlier than people thought they would. And as soon as the ETFs were approved, GBTC went from a 50% premium all the way back to zero. And overnight, everyone doubled their money on that trade.
Not to mention Bitcoin's price was ripping too.
Yeah.
Yeah.
So,
what?
That was one of those things where it was obvious to me that was what was going to happen. I talked to people who told me that there's no way that it's ever going to return to NAV. And I was very happy that they were wrong.
Me too. Yeah. It's kind of, I think we know how Michael Saylor feels when strategy's trading at a 2x mNAV and he issues shares to buy Bitcoin, right? That's the exact same trade in the inverse. So you've been through 80% drawdowns in Bitcoin, Junseth. What's kind of your mental model of how to survive a bear market, maybe for Bitcoin and for equity holders in Bitcoin treasury companies?
Um, don't do leverage. That's really it.
Mm.
I mean, if you're gonna do leverage, do it very responsibly. Don't get out over your heels. Understand that leverage goes up and down. So, like when people talk about not having more than you can lose, consider the possibility if you're, 100x lever or a 2x leveraged, that you're going to lose 2x when you make those bets. So, yeah, don't leverage yourself. That's really the only thing that I think. Don't leverage yourself in up markets. In down markets, I think a lot of times that's where a lot of the opportunities are, and there's a lot of asymmetry that can happen in those markets where there are things that you don't necessarily know what are going to happen. I think a good example in this last market would be like Core Scientific. Core Scientific went bankrupt and then gave the middle finger to their creditors, and the result is that Core Scientific recovered in full and is worth a lot of money today. And if you had made that bet, you would have done very, very well. I know some people that did make that bet. So yeah, I think there are these opportunities in down markets that you can look for, and in the up markets, the tendency and desire is to really go balls to the wall and try to maximize your returns. And I think it's really difficult to do because your returns are not muted, but like you don't know when the hot potato is going to be in your hands. If that makes sense, you don't know when the music is going to stop and the hot potatoes in your hands. I think everyone in a bear market or in a bull market tends to get very exuberant and thinks that, like you said earlier, that this time it's different. And I think as a person who doesn't believe in cycles, I think this time is always different because I don't believe that there's any correlation between this cycle and last cycle. It just seems to do this for some reason and behave in this sort of weird way. I don't understand it. I try not to understand it. I'm never going to try to understand it until someone comes out with like a very cogent explanation about why Bitcoin has behaved this way for so many years. But yeah, I think not getting out over your skis is the best thing you could possibly do. And then I think if you're wealthy or not even wealthy, I'm the only Bitcoiner who would say this, but if you are holding what feels like a lot of money to you, I think it's okay to take a little off the table. There was a time when I had no money and $30,000 was a lot to me. And all of a sudden I'm looking at my money and I have a lot more than $30,000. And I think it's okay to take $30,000 and put it into, other things and say that was a lot of money to me and kind of benchmark that. And then it's probably going to underperform Bitcoin, but there's a behavioral change that I see in people when they set themselves up. They're able to withstand risk a little bit more. And I think this is in my world, risk is volatility. They're the same thing. And Bitcoin is the most volatile asset on the face of the earth, apart from maybe MSTR stock a few months ago. So like the risk of Bitcoin is very high, and you don't understand what that means until you're holding it and you feel like you're about to go to, become worthless as far as your net worth. So you need to be able to withstand the risk. And I think it was JP Morgan said that you need to adjust your holdings such that you can sleep at night. And I think there's just a lot of Bitcoiners who don't get much sleep to the upside or the downside. They're excited on the upside, but on the downside, they're ready to jump out a window. So set yourself up so that you can withstand the risk and you can sleep at night, especially when Bitcoin's going down.
Yeah. Junseth, thanks so much for this conversation. Where can people find you and follow along on social media?
I'm Butt DeCarson on Twitter. For those who know me, I apologize for the cleanness of this conversation. I was going to insert putting gold in your butt joke earlier on, but I couldn't find the place for it. So apart from
there we go.
very clean.
Yes, gold in butt joke.
At very small
achieved.
claims on Twitter if you
very small claims. We'll put that in the show notes. And one thing we have all our guests say before they go, Junseth, is stay orange.
All right. Stay orange.
Ladies and gentlemen, everybody's favorite Bitcoin contrarian, Junseth.